Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is focusing on Monday, April 13th through Friday, April 17th, 2009. Alright folks, we're going to get into things today. It was an unbelievable shortened holiday week on Wall Street last week with a huge move coming on Thursday, the last trading day of the week, as we had the holiday on Friday. Now the key about this move on Friday, I really want to dissect because I think there's some things that we need to really digest, understand, and see if it's really the true move in Wall Street. Because I'm going to put forth some opinions here today that may shock some of you, may open some of your eyes out there about what I think is going on here. And I think it's something we all, as investors and traders, need to understand. And I think it could be telling us something about what's going to come in the coming weeks. So, number one, let's talk about the rally on Thursday. Huge move up on the markets. The Dow up 250, the Nasdaq up 62, the S&P 500 up 31.5 points. Now, overall, this was a monstrous move on one stock, basing the whole entire move, Wells Fargo. Wells Fargo coming out at 8 o'clock in the morning, 8 a.m. Eastern Time, and here's the chart saying that they basically were going to do 100% better for the quarter than anticipated, blowing out numbers from Wall Street, the analyst numbers coming in close to 55 cents a share for the quarter. Now that's unbelievable. I'm not here to dispute that. What I'm here to tell you is to be aware of the implications about what's been going on over the last month or so with why these numbers are so spectacular, and if it is not a little bit of the wool getting pulled over the eyes of the investor or the traders. And what I mean by that, we're going to obviously focus on the technicals, guys, so don't worry. We're going to focus on that, but I do want to talk a little bit about this because this move of 30% plus on Wells Fargo on Friday to me is somewhat of a fake move. Now, why? Well, granted, the stock did do it, so it happened, but you have to understand what's going on lately. First of all, is it any surprise to anyone out there that after they just changed the accounting rules that these companies actually have to go by, meaning mark to market, that they're going to do better? All right. Number one, when you have an accounting rule that basically says you don't have to mark, debt assets to what they really are valued at currently, all of a sudden, let's say a company had 10 billion in losses. All of a sudden, that change in accounting can knock off half those losses. So, Wells Fargo, for instance, let's talk a little bit about that. Let's say they come out and say, well, we were going to earn 100% more, which is basically doubling what they were going to originally earn if they didn't have to do all these accounting little snafus and all these little changes. Well, obviously they're going to double earnings because all of a sudden half of the assets that they had to mark down, they don't have to mark down anymore. So there you go. So all of a sudden it kind of releases everyone's view from, wait a minute, this doesn't mean that they're all of a sudden the company's doing better. It doesn't mean the economy's doing better. It doesn't mean things are changing. All it means is one accounting rule got changed so they don't have to mark these assets down. And guys, trust me when I say this, this will come back to haunt. Maybe not right now. Maybe the financials have gotten a huge rally, but I think Wall Street eventually will figure this out and say, wait a minute, yes, it was a surprise, but let's remember what the government has done, what the Securities Exchange Commission has done, what the changes that have been made. Remember also, the government's been basically pumping billions and billions of dollars into these companies, and they're allowed to basically pay no interest on that money to the government. Essentially what they're doing, they're lending it out for a few percent, getting, let's say, 5%, 10% interest back on that with nothing to pay there. So that's free money. That's definitely part of it as well. But again, guys, what I would say before we get into the charts here on Wells Fargo, and you can see this chart on Wells Fargo, an unbelievable move up here. Actually, technically, it was definitely showing. Look at this good consolidation on that chart on the daily Wells Fargo. Look at this move. Big move up. Hardcore consolidation, blast off. Now that's a sizable move, but look at that consolidation right into a double moving average support line right down here. That's a beautiful consolidation pattern. But again, what I would say, guys, is don't get too enamored with this. You're going to have Goldman Sachs reporting earnings in the coming week. You're going to have JP Morgan reporting earnings. And I do expect them to be almost equally as good. The reason being, again, is because they still have these mark-to-market issues they can just avoid now. You don't have to mark-to-market anymore. You can avoid that, so that's going to come into play. Okay, so just again, I want to make sure everyone's aware of this stuff. I am seeing some indicators on a couple of these financials that they are topping out. We'll have to see whether or not options expiration week, which is next week, and remember what we say, guys, caution on options expiration week because they can flush this market both ways. They could drop it one day and rally it the next just as much. It's one of those weeks where the big money likes to take small money from the individual investor, so be aware of that, please. Now, let's go back to the spiders chart, guys. Let's do a little analysis here. I want to really focus on the intraday 10-minute. Let's set ourselves up for next week. These are all your key lines. Basically, you have your moving averages. First of all, this is the 10-minute spider chart, and I'm utilizing the 20 moving average here in yellow, as you can see it curving up. In purple, you have the 50, and in red, you have the 200. In addition, I have yellow straight lines here. Those are all key levels in this market you got to watch, okay? In addition, the ones that are slanted are even more important. Those are major resistance levels from an angled point of view. And I'm going to show you as best I can where I got them. First of all, we're going to stretch all the way back to the angled ones. Look at where these things come from. One comes from down here. The other ones actually come from even further back, from a low point here on the chart, going back to mid-March, right down here, right at the lows here, and they actually span all the way up and actually connect through key levels. This one connects through the top here, this one through the bottom here. Continue on. Here's where the next one's starting. And just continue to watch as this one connects through the top right there. See how the top of that comes into play right there? The top right here comes in the one below it. And you can just see these ones are major, major lines that continue up here. And ultimately, again, this one goes through this point. This one goes through this point. And notice how each one is just so imperative to major moves in this market, either big tops or bottoms. Here's another high point. Here's the low points. And this is when we get into the current level on the markets. And you can see how beautifully this moves right up underneath. And that's what the market held on Friday, beautifully. On Thursday. Friday's closed. Market was closed on Friday. Now, notice how the top one basically goes right there. And this one connects here, and you basically pierced it. You closed above, but again, you're coming into a little more resistance right at that 86 level on the intraday chart. So watch this on on Monday. Should we get through that level, you may look for a little bit of resistance at the even number of 86 if you confirm this move up. Otherwise, you really want to focus to see if this line breaks down. You get a breakdown on this line, you'll come down and test some of these lower levels that I have marked in yellow. Again, Friday's action was quite impressive, guys. Initially, you gapped right into our first resistance. By the way, this area was the high point of the markets over the past couple months. So it gapped right into it. It fell initially. The next candle closed above it. Once you close above that 86.60 level, it was off to the races. Right to resistance, pull back to support, right to resistance line here, this yellow line again, pull back, and then break through and squeeze into the close right up here into major resistance again. So you have a very unique charting pattern here on this monster move. Should the market break these levels and start trading down, you're really going to look for gap window right down here. Right around, that's around 84.30. If that breaks, you want to focus ultimately down to see if this does gap fill. You'll have obvious levels all along the way, but you really want to see if that's going to be broken there. Gap window would yield gap fill possibly over the next couple days in the week. If you break up, I'm going to go to the 60-minute chart. Here's your 60-minute levels. Notice I have some key levels on. Some match up beautifully. This one matches beautifully what I had on the 10-minute, and you can see we pierced it on the upside. If you continue up, there are some other levels, but you won't see them because it goes actually too high. So I'm going to extend my chart all the way, and you're going to see here how they come into play. All right? And there we go. So just watch this one on the upside. Next week, you're going to have a resistance right over 86 at 86.20. Then if you break that, you have this one slanted, but ultimately this one in yellow will be the big one at about 87.80. That'll be a big one, 87.75 up on that rise. On the downside, these are your levels coming into play. You have a good support on the 60-minute at 85.40-ish. Then ultimately the lows of the day right there, which will come into play at 84.40. If you break that, watch your moving averages, obviously. And the ultimate level, and I'm going to go back to a smaller chart now, so bear with me here. Let's go back to the smaller chart so we can actually focus. This one was the big one, and I want to show you this quickly in this video where I get this from. These are from the lows going back to early March. These are the ultimate lows, guys, that we hit. And if you notice, connect the low to the low, and then extend all the way up to this low here. These extend to this low, and then notice how this level was the key level. So you never broke this level, and then you rallied up into major resistance up here. You're coming into some good resistance. Now my look is going to be, when do we break this line? When we come down again, do we find support and bounce up again, or do we break this trend line? This one's going to be a major, major trend line break if it does happen. You could get a nice flush if you do break that line, so keep an eye on that in the coming week as well. Now, first of all, let's set up the scenes. Monday, probably hangover effect from the holiday weekend, maybe a little light volume. Tuesday's going to be a big day. Goldman Sachs earnings, huge day. You're going to have a lot of economic data. You guys can check on the earnings and economic calendar on our website, inthemoneystocks.com, for all that information. You can follow it daily. Again, it's going to be all the major earnings, all the major economic news that we're going to have coming in the week. In addition, guys, just be aware, if you really want to get into this stuff hardcore, if you really want the premier guidance on the daily charts, on the weekly charts, on the oil, on the gold, on the US dollar. By the way, the US dollar is a major player in what's going on right now as well. You need to join the research center at InTheMoneyStocks.com. You'll get guidance, you'll get education, and also the chat room. The chat room's separate, but you can join that. It has video. We go over live stuff all day long in the chat room. Take care, folks.